Next question I want to address that I receive often is, I haven't fully allocated, or I don't have any yet, and the market's gone much higher than I thought it would get to. I'm waiting for a pullback, but should I buy now? And this question gets old, but I want to answer it because it's a legitimate question that people have. And my answer has always been throughout this process that now is the time to get your position. But with the caveat that if you get in now, that you will be okay with or prepared for a retracement of 30 to even 40% in this market. And in one of the previous videos, I showed that during the last bull market, we had frequent and consistent 30 to 40% retracements in the market. But if you want to wait for a 30 to 40% retracement in this market, you may not get that. And for example, we haven't had one yet. We had around about an 18% retracement recently, not enough for anybody that was waiting for a 30 to 40% pullback to reload. And what's happened since is the market has moved up by 40 to 50% each time. And now you're sitting at a point where if you are waiting for a 30% retracement, you'd still would be buying in at a level that is above what you were waiting for. Okay, so I know as price gets up and goes higher and it's up 180, almost 200% off the bottom, you start to think, well, it just has to be now, right? It's almost like walking into a casino and looking at a roulette table and seeing 10 reds in a row, and you think, well, black's next. It has to be black, right? There is no reason why. It can't be any other way. There's been 10 red spins. But of course, we know that each spin is independent and there's 50-50 chance. And it's not an exact analogy, but it gives you the sense that if you're looking at this prior move or this recent move and thinking, well, it's overextended, it's gone too far, it has to pull back right now, then I think you're not looking at this market from the correct lens. What we're seeing right here is a massive scramble to accumulate Bitcoin. And in my opinion, and this is only an opinion, it's not based on any sort of evidence or scientific proof, but just my experience of the markets and what I see in this tape, and what we've seen since this zone here around the 6,000 and the drop. I believe that all the sellers are obviously exhausted. They're out of this market. Most either capitulated in this area here or capitulated during the massive decline into the 4-year cycle low. Then we had this long period of accumulation. There was additional heavy accumulation in this area. There was accumulation in this area. But this candle right here where I came out with my 4-year cycle low is in, this was the aha moment. This was the point in the rally here where supply completely dried up, and then price discovery took over and the market has moved higher ever since. I believe there is just not enough Bitcoin going around right now. There is far too much demand for Bitcoin. New money, not old money, new money. We've had the rotation now. This cycle here is over. This is a new 4-year cycle. This is the new accumulation phase of a 4-year cycle. And it's hungrier than it was in the prior cycle. We are seeing gains much earlier in the cycle than we did last time. And I think people are just fooled by this last 4-year cycle where they think, oh, look at this, it's just accumulated. I mean, and I'm guilty of this as well, but I'm not guilty to the point where I'm stubborn in any one view. I let the market dictate what it wants to do, and I try and adapt as fast as possible. Unfortunately, a lot of people have not adapted to this cycle, and this cycle is different to the last cycle. This one took a long time to form and to start building out of this lower accumulation area. This time around, and whether it's because there's more awareness, or whether because from a macroeconomic standpoint or from a world standpoint, we have a rush to safety, or a rush to buy these types of assets that aren't correlated to general markets. There's many reasons why it's the case, but I believe right here we have a level of accumulation that doesn't seem to me like it wants to at any time soon. I don't believe this is highly speculative, right? I believe we are accumulating, and we have seen 3 or 4 weeks of accumulation in this $8,000 to $9,000 range. I don't know. I don't see why. I gotta be perfectly honest with you. Why we couldn't see a fairly fast move to $12,000 to $13,000 over the next 3 to 4 weeks, and then pause for 3 or 4 more weeks in the next cycle, next 60-day cycle, and then go again, and then go again. I don't see a reason why we couldn't be at $20,000 by October or November. Okay, it's not a prediction. It's just a read of where the market is going. And in general, my rule of thumb is where price appears to be heading, or where price is heading in a certain direction, there's a very good chance that in the future it's going to be somewhere beyond in that direction. And when you clearly look at this chart, what do you see? You see a strong directional trend and move to the high side. And if you don't think price is going to go up here and you're expecting it to go down here, then basically you're predicting that this trend is going to end. And it's based on very little evidence. And in general, when markets are trending with such consistency or such force, they will most likely end up continuing that trend for a much longer period than you expect. So stop fighting this trend and stop trying to get a better price by 10, 20, or 30%. You're missing out on getting established and getting that position before it goes up to maybe 20,000, and then you don't know from there where it goes. You know my price targets, you've seen my previous videos. I have no idea when we get to that level, but you want to stop messing around with the allocation and just get the allocation and be happy with it, because you have a long-term strategy in mind. If you're on this journey, the target is 56,000 at the 1 trillion market cap level, but probably in a 6-figure range, 100, 125, 150, and over 200,000 as well. So we're talking about 4 figures, not 5. We're talking about 4-figure price still, right? We're below the 10,000 point, and our target is 6 figures. So we're skipping an entire figure there. That's our target. So worrying about catching this small move, and I know I'm repetitive here. I've said the same thing in a couple of different videos. But getting a position now really doesn't matter at what level still when you're talking about the $150,000 to $200,000 price targets that we've talked about, okay? And because Bitcoin now has more legitimacy than it had 4 years ago during the last start of the 4-year cycle, I think this is why you're seeing much more flows coming into this asset class, because there's much more trust in this. We're also seeing the same type of move more recently in gold. And here is a monthly chart of gold. And you're seeing this massive foundation here, the 8-year cycle low, and then now we have this massive candle here, both on the weekly, is showing something similar, but on the monthly, multiple touches of a resistance area that's now broken through. I think we've broken through. We may spend some time consolidating just above that breakout point, but when you look at this chart, right, you're seeing flows into gold, which also is a zero interest asset with obviously thousands of years of history as a hedge and as an asset that has no counterparty risk. You own gold free, and you have no obligation to anybody else. It is pure money. And Bitcoin, I don't think is at that status just yet, but it is catching on, and it is getting to that point where it has very similar properties. It has similar properties now, of course, but in terms of trust, because this is all about trust. Gold itself, obviously, as many like to point out, is just a rock, right? It's a natural element, but it has value because of its scarcity and because people have trust in its issuance, that it cannot be manipulated and it cannot be just produced out of thin air. And that scarcity and that trust has value. It's a store of value. And Bitcoin is achieving more and more widespread trust and faith. And that's why you're also seeing this type of move now. And again, we will see 30 to 40% pullbacks. I don't advise waiting for those to buy. If you have extra capital above and beyond your standard risk, the standard risk allocation that you want to have for Bitcoin, and you want to deploy some more, then maybe on a 30% pullback, that's when you deploy. But in general, I'm looking at this 10-week moving average, and this to me looks orderly. People think it's speculative and it's unsustainable, but to me this looks orderly, and I don't want to discount that. So I want to just zoom out now, and this is not just for hopium purposes, right? But I want to zoom out and just emphasize again that the goal is much higher, right? The goal is all the way up here at the $200,000 range, in my opinion. And again, we're talking about a very small portion of that move. So as 4-year journey hodlers, that's our goal. Keep that in mind. It's nice to see this type of move in the short term. It's nice to see portfolio up 100, 150, 200%, but we're going for a 40x move, and we're looking at a 2x move and 3x move right now. So we have a long way to go, and it's going to require a lot more patience. It's going to require being able to sit in these positions with massive gains, and if all goes well, once we get to 20,000 above, the gains will be even bigger, and you need to prepare yourself now for those gains that are to come. And by being prepared, then you won't feel the need to sell on a 40 or 50% decline, or you won't feel as if the gains are too much where you do need to sell. Now again, the last thing I want to end with, caveat, is this does not mean it's going to happen. Okay, I don't want you to feel that I'm saying that this is a guarantee or a certainty, because it's not. There's no such thing in anything we do, investing or trading related. And for that reason, you need to keep your allocation reasonable relative to your overall wealth. And I've talked about my 10% allocation rule. Now, yes, I am older, I am more established, I have more diversified assets. So for 10% to me, not the end of the world. But for many of you, that you're looking at these charts and you're thinking about this as if you have to put everything in and risk everything to make everything. And again, I want to say that that's not the way you should approach this. Should you or could you allocate more than, say, the 10%? Yes, you could. If you're younger and you have got more time on your hands, of course you can risk more. But just my general rule is, this, like anything else, is an investment, and investments are not guaranteed by any means. So that's the 4-year journey video update I'm providing today. I hope you enjoyed this. Again, as always, leave any comments that you like. Good luck, stay strong, and be patient. All the best.